Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Thursday, July the 15th, 2010, and it's time to look at the charts. Let's do it. Today, we're going to start off looking at the Dow Jones Industrial Average. This is a 6-month chart. Each candlestick is 1 day. And today I heard a lot of people talking about the way the market acted today. We sold off, and then by the end of the day, we'd bounce back up. And at one point, we actually showed a positive day, but by the close, the Dow Jones had actually closed down 7 points. And I heard a lot of people asking, "What's going on? What's the deal? What do we do?" You don't do anything. What are you smoking? Seriously, we're not day traders here. We're swing traders. Did today's activity change that? No, it's right there, still overbought. Look at the slow stotch, huh? See that? Looks like that. Once it's up there, it's up there. No little intraday activity is going to change anything. I don't really understand why people are freaking out about that. Okay, you got resistance at the 200-day moving average. That's exactly what we're finding that resistance at. And I'd like to point out another item someone else brought up, a flawed analysis that somebody did. She closed above this downtrend line you see here from the high. You hit here, okay, and then she's closed above it for the past 2 days, and people are like, oh, now she's found support. That's not how it works. But back here, this is the 200-day moving average. You had support at that. You pierced it. You broke through it. You closed above it here. Did it now act as support? No, it fell down just like before. I mean, if you're a day trader, I kind of understand what you're talking about, but from a swing trader's perspective, that's not how it works, okay? Let's just basically look at this chart mathematically. Forget emotion, forget whether you're a bull, forget whether you're a bear. Just look at it from a mathematical standpoint, okay? And I love math because it never lies to you. Check this out. Here we have an overbought condition, right? That's a 1 in favor of bears, okay? Here we have, well, we won't even get into the resistance levels. That could be argued either way. So we'll just look at the rally you've had here. 7 consecutive days to the upside. 1, 2, 3, 4, 5, 6, 7. That's above average. We all know that. We can all look at this chart and count and say, okay, 6 is the high end. Why is this one got 7? All right, that's 1 in favor of bears. And remember, like I said before, whenever you're doing this, price is more important than any other indicator, so you got to give it 2 points, okay? Another point you're going to have to give it to, the overall trend is down. So you got to give it 2 points for going down, right? 2 points for 1 point for the downtrend and 1 point for the fact that it's just overextended, okay? Awesome. And I could also say that there's all kinds of resistance levels I pointed out here before. You've got this upper Bollinger Band line. You've got this previous high point here. You've got resistance at the 200-day moving average. And you've got a resistance line here. And like that invisible resistance line I talked about yesterday, right there, same level we've been seeing, okay? All of that is like little ceilings, little glass ceilings putting a lid on the price activity, okay? I would count that as favorite bears as well, but we won't get into that. All right, we'll get rid of those. So we have 3 reasons to be a bear. Look at this chart. Now I can also look at this and say, all right, we got a gap down here that's got to fill and a gap down here that's got to fill. All right, there's no gap above you, so you've got 2 reasons to look for gap fills below you, and no reason to look for a gap fill above you. Nothing good there on this chart whatsoever. Okay. We've been talking a lot about volume and how it's really, really weak, and that tells you another reason to be a bear in this rally. This is not something you want to trust. Whenever you got weak moves to the upside, let's scroll down and have a look at that. All right, here you got the volume. All right, let's quick look at this. All right, let's start with another one. You've got a big move here, low volume. Okay, move here, low volume. Move here, low buy volume. Move here, low buy volume. Okay, so if all of these have failed, all right, because of low buy volume, yeah, why would this one be any different? Okay, so that's another reason to be a bear. All right, so thus far we've had what, like 4 or 5 reasons to be a bear and no reason to be a bull, and we've been complaining about this volume being real weak. Well, today we get a tick on volume to the upside. The only problem is it's in favor of bears, so even that volume you had to give a point to the bears for that as well. There's no reason to be a bull, is I guess the point I'm trying to make here. I wouldn't change my opinion because of 1 day or 2 days. I don't really care. I don't know what could happen, but let's just say for the heck of it, it starts to just keep going up. I don't care. I'm going to short it. It doesn't make any sense. This is still, if you look at the indicators, they all tell you the same thing. It's overbought, short it. You got to trust your chart, plain and simple. Now, This one's a little bit more complex because we're talking about shorting, and a lot of guys, especially the novice guys, even some of your intermediate guys, shorting to them is like they don't comprehend it. You know, their mind doesn't wrap around it right. So think of it this way: if this was a completely upside down chart, and this wasn't in a downtrend, okay, let's say that this wasn't like this, but in fact like this, and you had institutional buying behind the move to the upside, and let's say that this right here wasn't institutions selling but buying, and this was institutions buying, and so forth and so on, what would you be doing? I'll tell you what you'd be doing. The same thing I'd be doing. You'd be waiting for the pullbacks and buying in them. So in this case, it's totally reversed. When it bounces, you short it. Okay? Very simple. There's absolutely no reason to do anything in this trend but short it, and I'll prove it. Right now, a lot of bulls are talking about, you know, the earnings data and how it's so important, and we keep saying no, it's really not that important. It's just news. You're going to sell it. You're not going to buy into it. It's second quarter earnings. We got lots of stuff on it on our website. You can read our blog about that. But the main thing to look at, go look at Hang Seng Index. Look at the FTSE Index. How are they behaving? Okay, the bottom line here is the world markets are being pulled lower because of the issues in Europe, all right? The FTSE is a really good chart to be monitoring that, and you'll notice we've got a lower series of highs here, still in the overall downtrend, okay? Nothing bullish about this chart whatsoever. And the past 2 days, she's been selling off pretty nice. There's nothing there to be a bull about. And they're totally ignoring second quarter earnings for America because it doesn't actually affect or change anything. They know the real problem is the economic data that we're getting, and that's all bearish as well. The fundamentals behind our economy, yeah, it's bad. So are theirs. So is Asia. Look at their chart. Quick look at the Hang Seng Index, 6-month chart, each candlestick's a day. Yeah, nothing bullish about that. Also today's activity, or I should say last night's activity for them. See that big old sell-off right there? Why are they selling off? If Intel's data was so important and all this second quarter earnings is so important, why are they selling off? Because of the fundamental economic data that came out. That was more important to them. Should be more important to you. All the technicals and all the fundamentals right now are in favor of bears. Other than your second quarter earnings that are coming out, they're going to run out. You're going to go through a cycle of it, and then they're going to be gone. And everyone's expecting third quarter earnings and fourth quarter to be worse than the first two. So there's really nothing else. I mean, this is your peak, okay? So it's the easiest opportunity to be short and to be a bear right now. If you're looking for analysis from a fundamental standpoint or technical standpoint, all the signs to me, in my opinion, all say the same thing, and that's be a bear, okay? Nothing else to report there. I'm not, like I said, we don't day trade here. We're swing trading. It's very simple. You can go back and look at all of our past results. They speak for themselves, okay? And we're using the exact same formula we've been using consistently, all right? And it's consistently made us money. So why today people think it's going to be different? Or, I mean, it's all the same, you know? All right, let's move on. Stop harping on that. If you've not been to our free website at perfectstockalert.com, it's 100% free right there. Dun, da, da. Okay, you can go to check it out. All we ask in return, refer a friend. You can see our top picks and a lot of other cool analysis videos, as well as nightly stock alerts and how-to videos, so forth and so on. Very cool. Also, we're 2 weeks away from starting our next trading course, where you will learn basically how to do what I do, and not just get, you know, each individual day's analysis, but you also learn how to do everything, how to use every indicator properly. Not a lot of guys misuse them, and that causes them all kinds of problems. They get oversold conditions, and they think, I got to be a buyer. Now, if you looked at this and said, oh, it's oversold, I'm going to buy, you would have got owned, okay? So we show you how to avoid certain situations like that, all right? Pretty cool stuff. You can go to our website and learn about that. Awesome. Let's have a quick, be sure you subscribe to the YouTube channel or hit you with a stick, okay? Now let's look at our disclaimer. The disclaimer, read it and weep. We got Friday is a good sentiment indicator for you guys. Be watching it. If you get it close to the upside, people are more bullish than bearish. If you get it close to the downside, people are more bearish than bullish. That's typically how that reads, so that's an easy one for you guys. And keep in mind, next week you got more economic data. It's going to keep weighing on the market. All right, God bless. Take care. Enjoy the evening.